Good afternoon and welcome to LBMA webinars. Today we deliver a TMO and Brexit update. It will be part 1 of 2. We have Ruth Crowell, Chief Executive at LBMA, Ed Blight, Chief Financial Officer at LBMA, and Stuart Martin, Indirect Tax Director at Deloitte LLP, as well as Chair of the LBMA's VAT Working Group. Thank you all for joining us. If you do have any questions throughout the webinar, please submit these into the Q&A function at the bottom of your screen. We will be taking questions at the end, and we hope that we have enough time to get to yours. Though if we don't, or if you do have difficulty submitting your question, please just email ask@lbma.org.uk and we will try to include these or get back to you after the webinar. Without further ado, I'll hand over to Ruth. So Ruth, whenever you're ready.
Thank you, Taylor. And thank you especially to Stuart Martin, Chair of our VAT Working Group, as well as Ed Blight, who's joined us this afternoon to talk about the terminal markets order, as well as a bit of talking about how we are preparing for Brexit, both as a local London market, but also as a global industry. I just wanted to update, mostly because I think with the excitement or the challenges of COVID this year, I think for even those of us in the UK, it's a reminder that Brexit is happening, and also a reminder to say that the market is ready. I think in some ways, the disruption that happened with COVID in March and April has made infrastructure providers as well as market participants even more resilient. So really wanted to deliver some simple messages in that London remains open for business as it has throughout the pandemic, and as it will, whether or not there is a deal in terms of Brexit come 1st of January. So access for everyone continues, and we are, of course, working with the government. I think as Taylor mentioned at the outset, this is part 1 of 2. Part 2 will be a briefing from HM Treasury as well as HMRC, which we will send out in due course. But I also wanted to talk a little bit about the vaults, the carriers, as well as refiners in terms of as we look to 1st of January, are we expecting delays at the border? What steps are being taken? And really to reassure that certainly from a gold perspective, we are not expecting delays for 2 main reasons. One, in terms of the market's preparation and the carrier's job there, but also in terms of the high value and the way it's transported. So coming in by plane, high value of gold, you're expecting prioritization. You could expect some delays with silver as this is coming across on trucks, but it's very much in line with other challenges in terms of the border, which the government will talk a bit more about how they're approaching that to try to make that as frictionless as possible. In terms of the market participants, there's been 2 main ways of preparing for this. One is authorized economic operator status to help make that as smooth as it can be. The other aspect for banks is, and we've seen this over the last 2 years, as Ed will know with his other hat in terms of membership, is the many LBMA members setting up EU entities which have applied for LBMA membership and therefore recognition in terms of the terminal market order. So I think that's a high level overview, is we are not expecting disruption come 1st January, and Ed will talk a little bit more about what we expect to happen there. But I think with that, I'm going to turn it over to Stuart Martin to talk a little bit about the terminal markets order, a bit of background, and the efficiencies it brings for the global OTC market. Thanks, Stuart.
Brilliant. Thanks, Ruth. Hi, everybody. I'm Stuart Martin, Indirect Tax Director at Deloitte. And I've worked with the LBMA for 8 years or so now as part of the VAT Working Group. I'm here to give a bit of background on the regulatory framework around how VAT applies to the bullion markets, why that's important, and some of the events over the past few years that could impact on all of that. So what is the existing framework? The TMO, or Terminal Markets Order, is a bit of legislation that was published in 1973 as a simplification measure when the UK joined the European Union and their single market. It's been slightly updated since, but remains in largely original form. The TMO said that for certain transactions ordinarily carried out on certain exchanges and markets, when those trades are carried out between members, that they could be zero rated for VAT, i.e. that no cash VAT will be chargeable. And that helped at a stroke to reduce the potentially very significant cash and administrative burden of trying to collect VAT within that trading environment, and also helped to reduce the risk of tax fraud. Aside from precious metals and the LBMA, other terminal markets include the LME and ICE. In the UK, generally, supplies of goods or services can be subject to VAT in one of three ways. Either they're standard rated at 20%, or zero rated at 0%, or exempt from VAT. Under the TMO, the relevant supplies between the terminal market members are subject to that zero rate of VAT. And that differs from being exempt because for zero rated supplies, they're still classed as taxable. And as a result, purchase VAT incurred on related costs can be recovered by the supplier. The TMO covers physical contracts that don't go to physical delivery, and so includes derivative contracts in spots, futures and options on commodity contracts when they're traded on those terminal markets. It only applies to physical commodity derivative contracts, i.e. those that are capable of physical delivery. The contract doesn't need to result in physical delivery in practice. It can be financially settled, but the TMO doesn't apply to financial contracts. It's a derogation from EU law, which means that it's an exception to the normal rules and must be interpreted narrowly. But having this simplification means that reduced administrative burden in terms of reporting and systems requirements, paying over amounts of VAT, and therefore simplifying the process for members of the covered markets. So the TMO is very important to exchanges, brokers, traders, because it eases that burden. It allows the market to operate in a much more effective or efficient, smooth running way. It's worth pointing out that it's UK legislation and therefore only applies to transactions and taxpayers covered by UK law, and obviously applies in the context of broader UK and, subject to Brexit, European legislation. Investment gold is separately exempted from VAT, and that would be the default position if the TMO weren't there, whereas the PGMs are otherwise subject to VAT in the ordinary way, outside of the simplifications that we're discussing today. So that's all pretty complicated if you don't spend your life doing VAT for a living. And so how does the TMO apply in the real world? The practical application of the TMO to the precious metals sectors was always going to be very difficult, as it's not a regulated exchange with a regulated clear in the same way as the formal exchanges, albeit operating in a regulated sector. So you can never just plug and play that legislation into the market, much less how that operates today. So the LBMA and LPPM needed to agree a methodology with HMRC that apply the TMO to the sector in a pragmatic and meaningful way to address the issues and trading mechanisms that are in force. So that concept, which you may be familiar with, of the metal remaining under member control, achieved this very successfully. The original, or the precursor to what you today as the Memorandum of Understanding, was an agreement in 1991 between LBMA and HMRC, which set out a pretty short letter agreeing some of the key principles on how the TMO and broader VAT legislation applied in the context of the bullion markets, particularly in relation to trading that takes place while metal remains in what's called the black box. I effectively agreed that the zero rating provisions of the TMO would apply to certain transactions carried out in that context. The problem with the 91 statement was that it was very brief and didn't actually go into a lot of detail around the application to a lot of the common transactions that happen on the market. And obviously, things changed in the interim. And so by 2012, there was a clear need for some further clarity. So the LBMA and LPPM again engaged with HMRC to set out a more detailed statement outlining the background to the market and the associations and the legislative framework. And that memorandum goes into a lot of the common trading and custody scenarios and also a summary of the VAT positions around them, which gives considerable extra clarity then to the market on how to manage those VAT obligations. So as outlined in the MOU, the TMO applies zero rate to ordinarily dealt with on the market when one of the parties is a member of the LBMA. And in certain cases where a party is not a member, but where the metal is remaining under the physical control of a member in a vault. That premise is based on the transactions invariably involving, including a member, specifically a clearing member, in order to transfer the interest. For the majority of other common transactions, the MOU then goes out and sets out the position for those as well. Remember the core principle that the metal in those trading scenarios remains under the control of a member while the European position is that the TMO and its application over time has obviously evolved enormously since its introduction, and has long been the source of some debate between the UK and the EU. And that culminated in 2018 when the Commission brought infraction proceedings against the UK in relation to its perceived broadening of the scope of the TMO over time. The EU argued that this wasn't compliant with the UK's obligations under EU law. That went before the Court of Justice in 2019, and this year the court found against the UK in respect of its application of the TMO. I know Ed's going to talk a little bit more about that, and will certainly be covered in part 2 of this webinar. But suffice to say that the decision was really based on the grounds that the UK had not fulfilled some of its procedural obligations in respect of the TMO. It didn't consider wider arguments on the impact that the TMO has on the amount of tax revenue collected or that liability of options contracts. And so it's important to recognise that litigation was at EU member state level and won't impact historical reliance of UK taxpayers on UK VAT law. Our tax authorities were pretty much the first to say that, and so while all of that is important and we need to consider the potential impact of that, there's been no immediate disruption on how UK VAT applies to the LBMA members. I think Ed will go on to talk a bit about this as well, but it's an opportunity, I think, alongside Brexit to re-engage with the UK authorities on any changes or refinements that may be needed or merited as we go forward to ensure that that MOU continues to provide that clarity and consistency on how that applies in this market, to make sure that we continue to support the smooth functioning of that market into the future. Ed, or back to you. Sorry.
Yes, I was just going to say, first of all, thank you, Stuart, for that overview. And for someone who's been involved with the LBMA in the market for a long time, I think the TMO is something that's vital in terms of the efficient functioning, but I think it's rarely understood from that side of things. I think you've done a great job of simplifying it. And I think the real point there is simplification, so that VAT is not charged and then refunded, it just both in terms of the work for the participants, but also for the tax authority as well. So that is charged when there is physical delivery, and that's when you have the outcome, and it's clear in terms of the type of transaction. That's something, I think something I would say as we approach Brexit, it's ongoing communication with our peers around the world, but also in Europe in terms of how that works, and how it's to everyone's benefit who are trading on the global OTC. I think with that, I will hand it over to Ed to talk a little bit about the 1st of Jan, what's happening or not, as it were. Please, over to you, Ed.
Yeah, sure. Thanks, Ruth. Yeah, just to reiterate what Stuart was saying there, the judgment was very much against the UK government and the fact that it did not notify the EU Commission in accordance with its responsibilities under the Treaty on the Functioning of the EU. And this doesn't apply. There was no comment or any sort of judgment on the legitimacy of any transactions or changes made to the TMO itself. Now, the government have received the Article 260 letter from the EU Commission, and that's a requirement from the TFEU as well for the EU Commission to tell the UK government what it wants it to do in light of the judgment. And the Treasury's guidance to us has been very clear, in so much as this is going to be between them and the Commission and that any penalties, whatever they may be, will be at the governmental level, and they won't impact upon markets either going forward or retrospectively, as Stuart has actually mentioned. And that's the key thing. The key message across the piece here is that business as usual continues to be the way forward, and that UK law will remain extant unless or until it is changed. It's also been very clear, as we've been discussing with the Treasury, that the TMO is a very complex piece of legislation. And the common theme that's come across is that even if there were in the future a requirement to change the TMO, it would be a lengthy process, and it would also be a lengthy process that would involve industry consultation. And you will see that as a common theme going through a lot of the issues that I'm going to be covering in this webinar. So industry consultation, complex piece of legislation, would take significant time, and everyone would be involved in the process of change if that were deemed necessary at some stage. But right now, no change, business as usual. Let's have a little look at Brexit itself. We have been engaging with both the Treasury and HMRC policy to monitor any potential impact. So we know the transition period ends on the 31st of December, and that from the 1st of January 2021, the UK will have broken clean of the EU, and it will become responsible for its own laws. And of course, the TMO is a component part of those laws. We also know, as it's across the news at the moment, that there is still no deal being reached at this moment, but the negotiations continue to go on. So there's an element there that we're monitoring as well. But there, alternatively, outside of financial services, there has been much guidance out there already on how the supply chains will operate. We know that our logistic providers, as Ruth has mentioned, are on top of this, including, as was mentioned earlier, the AEO requirements. I would recommend listeners to look at the BEIS Transition Readiness Forum. Now, this is a government webinar series that offers guidance on what is happening with regard cross-border movements of goods, and that's both from UK mainland to the EU, and of course dealing with the Northern Ireland and the Republic of Ireland border as well. It's a very useful source of information on where the government is on its planning and its readiness and what needs to be put in place. So I'd recommend that. And at the base of this slide as well, there's also a link to an HMRC section of the government website, which gives an indication on some of the issues that might apply if there were to be a no-deal Brexit. But as I said before, at the moment, we don't know either way which way that's going to go. There's something else that is impacting as well, or that we need to be aware of and monitor, is the Future Regulatory Framework Review. Now, this was launched in 2019 with its aim to define the principles and processes for financial services policy development, who specifies and defines the activities that are regulated, who sets the standards for the regulated activities and the consequences of not adhering to them, the institutions who are responsible for developing and designing, and also the accountability of those institutions that are delivering and setting the policies. It's looking to adapt the Financial Services Markets Act 2000 and to define the post-EU regulatory framework. There was an initial call for evidence, and in March 2020 that was published by the government. And what an interesting thing that was mentioned in the paper that circulated those findings was that the government recognised the cumulative impact of regulatory change. And they cited two organisations who submitted, one of which indicated the cost of compliance equated to about 50% of their IT budget. And another indicated that about 1/3 of its total annual investment budget was the cost of compliance. So it's, the government is recognising that it's costly to do that. Now, in October, Rishi Sunak announced the launch of phase 2 of the consultation process. And that period the consultation period has just been extended to conclude on the 19th of February 2021. And that's looking to for views on the proposals for defining the government's role in setting policy. And remember, of course, policy in that respect was largely covered by the EU through the government in the past. And now this is setting the UK's role as a standalone organisation. It's looking at proposals for policy, standard setting and accountability, as I mentioned earlier on, and also enhancing and broadening stakeholder engagement. So it's the inclusion of industries and industry representatives in the process of evolving the framework. And of course, it's looking to put in place the post-EU framework, and it has proposals in respect to that. It is an open invite to financial institutions and firms, as well as trade associations and consumer groups, to provide input into shaping the future of the regulatory framework. The key point in the discussions we've had with HM Treasury and HMRC policy at the moment is that the outcome of this review will largely steer their agenda in the midterm once the recommendations are published and it goes through the usual parliamentary processes. If anything arises from that and impacts upon our market, then it's likely to be that there'll be industry consultation in the same way, so that we work through the best way to implement those measures. Again, linking back to what Stuart has said, it's this really that is steering whether or not HMRC and HM Treasury are going to be prepared to look at a wholesale review of our Memorandum of Understanding, so that we get the interpretation of the TMO aligned to the market as it stands in 2021, as it will be. So that's where we're at right now with these issues. The key words and the key thing is industry or stakeholder consultation. If there were to be change, there will be industry or stakeholder consultation in the process of making that change. And we will look and work with HMRC to look at some low-hanging fruit on the MOU to see what can be changed, where there are clear areas that interpretation needs to be better and better communicated to both parties so that the MOU operates soundly. Ruth.
Thank you, Ed. I think the key message is in terms of UK law remains unchanged on the 1st of January. So TMO continues. And as you've sort of outlined, a lot of work has been done, and there's the ongoing engagement that certainly is LBMA, and we would encourage the wider industry to take part in. What I would say in terms of next is really just opening it up in terms of, this is part 1 of 2. And so our next session is going to hear from government themselves in terms of Treasury as well as HMRC, and we'll be sending that message out. But I think as part of that, and it's really looking to gather any questions that haven't been answered or concerns that there are, certainly in advance of Brexit, which I wouldn't imagine that there's a lot of those now, as we've had a long time coming on preparation, and you've got the reassurance and the experience of the disruption in March that are confident that the market will work together both within the UK and abroad. So would really encourage you to take part in that. But also, if you do have questions that maybe you're feeling shy to ask right now in the Q&A, because we haven't had any come through so far, or perhaps you're not a VAT specialist, please send the message on to those people within your organizations if they have questions in terms of the upcoming 1st of Jan, or if they would like to have feedback in terms of this body of work that you've both mentioned of the updating of MOU. That is a work stream for next year. So if you'd like to join the VAT working group, if you would like to certainly hear the updates from that group, please send that interest as well as specific questions into Ed as our main point of contact within the LBMA. But certainly you can also do that via ask@lbma.org.uk. So I think just in terms of participation, I think we had a hand raised, but I would maybe suggest if there's a question, because we don't have that turned on the function, in terms of just to type a question into the box. We try to do that, but that's certainly the way for interaction right now. Are there any comments while we perhaps wait for someone to type that in from you, Stuart, or from Ed? In terms
I just think it's worth reiterating from an LBMA perspective, whilst there has been a lot of UK-centric information, because that is what's driving the change from Brexit, the work that we're doing is very much looking at this not only from a UK member perspective, but also from our EU members and the rest of the world, so that there's a better understanding on the impact across the board, across the global membership. Just wanted to reassure our members of that.
I think that's a good point, and I think there has been a long history of trading, certainly for UK with the continent, but ultimately the client base in terms of local London is the overwhelming majority is global. So we want to approach this certainly on a global basis and make sure that that trade is as frictionless as it can be, even with the changes in terms of the UK exiting. I haven't seen any questions come through, so I'll just say if there's any final thoughts from you, Stuart.
No, other than to say, I think, I'd say that the LBMA has been tremendous, I think, over its history in leading that consultative and communicative process with both with the market and with the tax authorities. And so, super keen to continue that as we move into the next phase.
Brilliant. And I think I've had the one question come through, so I'm just going to raise it. So it's just, is there any way that border disruption, be it with gold or silver, could affect the smooth functioning of the London gold and silver market? The simple answer to that is no. So in terms of the terminal market order, which is local London, the UK law remains unchanged. And as I mentioned, in terms of the physical delivery, gold, we don't expect there to be a delay just in terms of that settlement. So the market will function. There'll be no change there. There may be some delays with silver. We will obviously work with the infrastructure providers and extend delivery times if that's necessary. Certainly the recent experience of COVID has seen that work very smoothly and in many ways has become the new normal in terms of functioning. But also for those who've been a part of the industry for a longer time, I mean, there were disruptions, a few decades ago where a similar approach was taken. So we don't expect the smooth functioning to be there. Okay, I think with that, it leaves me to say thank you to our panelists and to turn it over to Taylor, I think, for any final remarks.
Yeah, thank you so much, Ed, Ruth, and Stuart, for your time this morning. We're very much appreciative of that. As Ruth did point out, if you do have any questions that you didn't have time to ask or that come to you later, please email us at ask@lbma.org.uk, and we will pass these on to the panelists to provide you with an answer. And with that, as we wrap up, this is our final webinar of the year of 2020. We will be back on Thursday, 14th of January 2021. So I'll be taking a long break, which I'm very much looking forward to. But I did want to say a little thank you, because it's not just, the behind the scenes stuff or the participation from our panelists and our hosts and speakers during the webinar, but also to you, our attendees, for showing up every Thursday. It's been a pleasure to host these webinars for you, and I look forward to it in 2021. So with that, I hope you have a wonderful holiday period, and we will see you again in the new year. So thank you and goodbye.
Well, thank you, Taylor. And if I may, on behalf of our viewers as well as the team, thank you for all the hard work on the webinar series. Certainly, Taylor joined us as our in-person event specialist, and that's been a very different year for her. So we appreciate all the work you've done. And also to those who take part, if there's something you'd like to see going forward, please send it in. Or if you have ideas in terms of speakers, topics, etc., we'd love to hear from you. So have a very happy holiday season, and here's looking to a much brighter 2021. I'm sure the world could use it. So thanks again.
Thanks, Ruth. Thanks, everybody.
Thank you.
Bye.